Hey everyone, it is ABJ here. What a market we've had recently. Looks like the market gods have blessed us with an all-time high. Big grats to the QuantData team for capitalizing on that. Every day in and day out, where they're on stream showcasing the data and showcasing how we're personally taking on risk in the market. I wanted to make this video to showcase how I personally use exposures to determine sentiment, what to watch out for now that we've hit all-time highs again, and a few trades that are still ongoing for those who don't have time to participate in the streams. I've got three tickers for you. One is Tesla via TSLL, SOLT, which is a new ticker for Solana, part of the crypto chain. Bull, which is Webull, and we might talk about SOXL. There's four actually. So SPX, we are now at 62.27, surpassing all-time highs by just a little bit. Last time we had a 62.15. So XPX is kind of in a euphoria mode. You know, when we hit all-time highs, everyone gets kind of worried. We don't really know if we're going to go any further, how much further we're going to go, if there's some sort of pullback. Overall, how I like to determine sentiment is, again, it's based on the Greeks. I'm going to show you shortly here. But there's one more thing I wanted to add on, and that's the fact that we're starting to see a lot of puts be bought up around here, especially today. If you were tracking SPY, 5:30 put July 25th and July 31st. I'll actually show you on this contract chain here. So this strike has started to see some momentum. Now, speaking of that, the thing we need to know and recognize is that a lot of market whales, a lot of large participants, they actually have some obligations. So when we do hit all-time highs, you can look at the volume here, it's 26K. So this freaks some people out. But when we hit all-time highs, there is an obligation for the market makers and the dealers and whatnot, large institutions, to hedge. Hedge accordingly to tail risk events. So in my opinion, again, based on deltas, this seems like a bit of a hedge, right? Just a tail risk event, just in case. I think as well, we talk about this in QuantData, that if you are actively participating, we should probably act and behave the same way as the dealers are doing. Hedge accordingly if you do have the capital to do so, or follow the VIX. If the VIX is very low, you know there's not that much opportunity. Things start to move a little bit slower, especially for sell side. A lot of the people that sell credit with us in QuantData. So that's my little bit of a note there before I get into it. Now, I wanted to showcase this especially because just things are crazy right now. Things are crazy. So I wanted to showcase this first. So up here on the top left, let me maximize this. This is April 8th. Now, if we all remember April 8th, this is the net delta exposure by strike. So April 8th is here. Right here, the Tuesday before this big ripper candle we experienced. We can all remember that. This is when Trump said, or did that famous tweet, it's a great time to buy. But this is what the market looked like. And so you can see that overall exposures, they looked pretty terrible, right? All across the chain, there's this one, ripper delta at 5,000. But overall, we imagine this as kind of an army of where we're trading. And overall, it does look like short deltas remain. So it is, overall, market is looking short. But look at the market now. So I'm going to clear this. We're going to go to July 2nd, sorry. That's today. Look at how the chain has just changed. Right, so this is my way. This is one of my metrics that I use to gauge whether I should be more focused on hedging, going long, being risk on or risk off. Long deltas tell me that it's okay so far to be risk on, and it tells me that dips should be picked up. Any sort of momentary pullback we have, it should be a better opportunity for us to get long. Now, looking across here as well, you can kind of see going forward in time that there is a lot of interest for 65, 66, and there's this one here that we noticed started to grow just today. It's the 7,000. Now, if we start to look at the expirations, go to OPEX, July 18, you can see exactly where people are starting to prime for. Now, this week, tomorrow is a short day, and next week is we're back into a full market there. So we can see that 11th, we're going to look at the 18th so far, but this is the OPEX date, 6,300. We don't have a lot of room to go from where we are now. We're at 6220s. To get to 6,300, that's not a lot. So what I'd like to see is, maybe next week we get a little bit of a pullback. So far we've got this little bit of a range that we've been trading in. Right, trading in yesterday's range. This whole week we moved really slow. Right? And so what I'd like to see is a little bit of a pullback and then a juice back upwards towards the 6,300. We can kind of see on the gamma side as well. So gamma being that magnet for price, if we zoom forward, you can see 6,300, 98 million in exposure, 64, 65, and then of course you do see that 7,000. That's like all the way up there, right? That's a bit of exposure. But if we go directly to the 18th, you can see it right there. 63 is also a pillar right there. So that should be a magnet. And of course, if we are to get to 63, that obligation, we do kind of need to make a move back down, or at least chill in this area for some time before we get to 63. Overall, it looks like it should be net long, right? And so down here as well, this is the dates of where long deltas are. So delta is your primary. And so when we look here, right now, July 2nd, this is how much has changed, right? This is April 8th, before that famous tweet. And you can see that everyone was scared. Everyone was risk off. They wanted to short more so. And now we can see September 19 into December 19. Quite strong. Quite strong. This is 240 billion in long deltas. Even when we were in this turmoil, we didn't even see that much over 200. So right now, you can see that it's very risk on. Now, obviously, we know some famous analysts are saying 7,000 SPX end of year. I wouldn't be surprised. I do think 6,500 SPX is very likely at this point. Not financial advice, of course. But yeah, that's kind of what we're looking for. And so, again, when we hit all-time highs, you do want to watch out for potentially hedges that might throw us off guard, right? But you should also be starting to hedge your portfolio as some sort of tail risk event. So going into some tickers, I wanted to showcase to you guys a few here. So I'm going to go ahead and remove this one, because we don't really need this one anymore. And I'm going to remove this one as well, exposure by expiration. So the first one I want to talk about is going to be my favorite as of right now, Tesla. So Tesla has been quite a bad one right now. Obviously, Trump and Elon are fighting, right? That's not too good for us. But overall, the profile looks pretty good. So this is July 18, and right now, we've hit all-time highs. Mag 7 is sort of somewhat cooperating. The only one that's not cooperating is Tesla. It's kind of doing its own thing. But what we've seen every time Tesla dipped is a lot of calls start to flow into the market, regardless of Tesla dipping. So it tells us that there is somewhat of still risk-on behavior. What I really like is this 340 mark for July 18. Right now, Tesla trading at 315. 340 it doesn't seem that far out, but I think if we can get to 340, whoever's long here on this gamma strike would maybe potentially roll it forward. Now we started seeing strikes of 400 get bought up, 450 as well for September. That seems kind of telling for me. Now I wouldn't want to take this trade via options. That's not what I've done. What we've done over in what we're showcasing in QuantData is that taking advantage of the leverage share TSLL might be a better idea there, because trading long options directly might not, obviously out of the money options, they do go to zero, right? And so we don't want that happening to us. Taking TSLL allows us to be wrong. It allows us to have some exposure in the underlying, but also if we're wrong, we can start to sell covered calls or start to sell cash secured puts so that we can average down if we need to. But this is kind of the idea that we have. So this is the picture of Tesla from today. So these are all the hits that we're seeing, and you can see that the majority of the hits are all calls, and a lot of them are sweeps. And it seems like this is the same thing that we're seeing every time Tesla takes a little bit of a downward move for the day, or it doesn't cooperate with the rest of the Mag 7. So that's what we have there. So the idea again is taking it via TSLL. We are already in it over in Quant. Average price 11.10. So not too hot right now. It's starting to dip a little bit, but again, we're able to sell covered calls to kind of protect ourselves, which we've also done. We've been rolling weekly covered calls on this bad boy. So next ticker idea that we have so far, it's SOLT. So Solana has entered the market. Now we know Bitcoin, we know Ethereum, but SOLT, this one here has been quite an interesting ticker. Now, if anyone knows me, I'm not that big of a crypto fan, but if there's potential to make money in the market, I'm willing to participate, even if I don't believe in it. So SOLT. Now, what we were talking about in this ticker is that IV is actually quite high on SOLT right now. And so I think one of the better trade ideas that we could have for this is actually taking advantage of a spread as a just in case, because this is the leverage share. It's a 2 times leverage share of Solana. But just in case we're wrong on this, we don't have to take the shares out, right? We don't have to buy a naked option. We were saying that this might actually be a better idea. So for this trade idea, what we did is we bought an in-the-money call at $5, August 15th, and we went ahead and sold the 16 call. That puts us at a debit of $695. But it puts us as a potential of max profit of $405. Now, all price needs to do for us to win on this trade is to stay above $11.95 from now until August 15th. Seems pretty reasonable for the time of this trade. Again, it takes advantage of that IV that's very elevated for this stock right now. IV, I believe, is over 140%, 178 for the August 15th strike. So as time comes closer and closer, this should deplete, and so that should help our position greatly. That's quite a drop from what we've seen on Solana, but again, it is a leveraged share, so it could absolutely happen. But again, just needs to stay above this price, and we win on this trade. Seemed like a pretty good risk reward at the time. If I were to show you this here, I want to show you SOLT. The exposures so far are pretty favorable for 18. Right, so we've got 18 on delta, we've got 18 on gamma side. So yeah, that tells me that more than likely, probability wise, it should go upwards in price. So next ticker we have is a bull. So we all know Webull has been kind of making its rounds on the news. Market Watch has put out a bunch of articles on Webull. If we take a look at the Webull chart, it kind of looks very reminiscent of Hood. So let's see. Let me show you bull. So look at that rally, that massive rally from today. Right now, if I show you the daily though, it might look a little bit more scary, but look at that. So right here, almost $80, all the way down now. Now it's starting to curl. Now if I showed you Hood, a lot of comparisons, right? It also did this a big downward move, and it's just surpassed it now. It's just gone on a crazy run. If we believe that Webull might potentially follow the same pattern as Hood, which I think there is something there. There's definitely an idea there, but we're also willing to take on that trade. So for bull, the idea is actually just a straight moonshot scenario call. So September 19. Let me show you what this ticker looks like. September 19 calls. This was the idea that we had. 25. Very cheap to get into. It would absolutely be a moonshot potential trade. But if we get to 25 months before, like if we get to 25 by August, this contract should, based on the math, should go 6x at least. So that should be, again, it's under $1, so it is worth the risk in our opinion. There's that. And then our next trade, our last one, the last one, special one I'm giving you. Now, I was plugging this in via a small account. So SOXL right now, looking pretty good. SOXL looking pretty good. So let me show you SOXL. SOXL making a solid rebound. We know all-time highs require the participation of semiconductors. So if we are to continue upwards in SOXL, upwards in the stock market as a whole for the S&P, we need semis. We need NVIDIA, right? We need SMH. We need SOXL to come upwards. Now, it's coming right back into the meat of the 28-30 area, which I really like. I think right now, because of the moves, the momentum that we're getting, it's been a little bit silly to put this in, and I actually really enjoy it myself. Again, it's perfect for a small account. If you put on a put credit spread for August 1st, so if you sell at 21 and you buy at 20 for $100 risk, you can actually net a $22 profit for this. SOXL trading at 26. SOXL would actually need to do a bit of a flash crash in order for us to lose on this trade. But again, it's only $100 risk. Again, we plugged this in via a small account just for a little bit of participation, just to see if this works out. But IV, it's not crazy high, right? Historical IV is 70%, but 90% right now is what it's sitting at. So it's a little bit above. So there's a little bit of IV that we can take advantage of for this spread position. So yeah, that's it. Everything I've shown you so far, that's bull there. Let me show you SOXL really quick for this OPEX. You can actually see that things are relatively bullish, right? Primed for 30 potentially. If we move above 26 and we get to this meat, these potholes 27, 28, I highly believe that 29, 30 is coming just based on this gamma interest here. And look on the delta profile, right? We know it's support and resistance. It's staying right at support 26. So this is good for the market. This is so far so good for the market. Again, tomorrow, short day, right? Market's going to close really early right after New York City lunch. So for those guys participating in the stream, I will see you there. If you like this and you learned a little bit about how to read the sentiment, the overall sentiment of the market with deltas, let me know. If you liked it, Of course, please don't hesitate to like, subscribe, comment if you can. It really helps with the algo. And it helps me to see what kind of content you guys like from me. So yeah, I'll see you next time. Next time I plan to talk about trader mental, how to take your brain from beginner to intermediate in trading. All right. Catch you guys next time.